Hello and welcome to CNBC TV18's Mumbai newsroom. I'm Sumaira Abdi and you're watching Your Stocks. Our two experts today, Shahina Mukadam, who's an independent market analyst, and Kush Bohra, founder at kushbohra.com, join in to answer all our stock queries. So thank you so much to both of you for joining in. And our first caller is connected to us already. Samir Shah is on the line with us from Mumbai. Hi Samir, good afternoon. How can we help you today?
Good afternoon. I have a query regarding I'm looking to purchase 50 shares of Cotton Greaves and 50 shares of Glen Pharma. So just wanted to know what is the future prospect for these two companies, and should I go ahead and make this purchase for either for a short term or for a long term purpose?
Okay. Any reason, Samir, you have zeroed down on these two stocks?
Because I see Glen Pharma does have the potential to grow in the long-term purpose. They do have certain recalls in the past coming up, but I just wanted to see if there's a potential for a short-term or a long-term purpose to stay in the stock, and also for Cotton Greaves, because I do see that in the mobility space they are quite growing, and looking for a bigger share in the electric market for two-wheelers. So that's the purpose for it.
So you have done some reasonable research. Shahina, would you agree that he can look at making an investment here, or would you like to suggest some alternative?
As far as Cotton Greaves goes, I totally agree with the investor. I think, it's a turnaround stock, small cap. If valuations look very expensive currently, I think over a period of time, it will start looking much more reasonable. Because if we see after 2 years of losses, they've started making profits in the last quarter, good profits. So I think it's a good investment, especially considering, as the investor alluded, on the two-wheeler space, they have got this tie-up with the joint venture with Ampere, which is giving them a good exposure in the EV space. They're making good moves. So I would buy Greaves Cotton, but I would avoid, buying Glenmark. I think, that has been a gross underperformer over the last number of years. And if you're looking at the long term, I would prefer going with some maybe Cipla or a Dr. Reddy or even a Aurobindo. But I would prefer these over Glenmark.
Okay, Kush, what about you?
My view happens to be exactly the same as Shahina's here. Greaves Cotton has actually shown quite a bit of a decent rebound over the last couple of sessions. It's trading above its averages. It's close to its resistance, which is at 180. But otherwise, the trend looks strong. The charts look strong. The indicators are positive. I would say the investor can buy this for about a target of 200. The stop loss here would be about 170 odd, which is the support zone. Glenmark, however, a very different space. The stock has been in a downtrend. It bounced over its 20-day moving average, but wasn't able to sustain that. So avoid Glenmark, and you could look at something like a Cipla or a Sun Pharma in the healthcare space, even a Laurus Labs for that matter.
Okay, Samir, you have the answer for you. It's a 50% hit rate, but there are some alternatives which have been suggested. Next up, we have a query coming in from Bengaluru. Maulin Patra has written in. He has 50 shares of Grasim at 12.15 and 75 shares of HCL Tech at 8.90. He's making profits in his investment, and wants to know what is a good time frame for him to remain invested here from a long-term perspective. So, Kush, would you classify both stocks as long-term bets, and what is the upside that we're looking at?
Well, for sure, both these stocks are long-term bets. Grasim has seen a very sharp revival. First up, I must congratulate him for buying this stock very close to its bottom from where the stock turned. So a phenomenal buy. What I'm also happy about is that he's holding on to the stock even after such a sharp run up. The structure looks very solid on the charts. The stock is able to trade above its 200-day moving average sustainably. I would say if he can hold on for another 3 to 6 months on this, he could very easily see levels of about 1800 on Grasim. HCL Tech, my view is slightly different. For sure, it's a long-term hold, but here the holding period would be 12 to 15 months for the stock to see any kind of revival. It's been in a very serious downtrend and has not been able to cross its short-term averages meaningfully, even in this current rally. So HCL Tech, could move up to about 1,000 levels and 1,100 also, but the time frame there is a little longer, about 12 to 15 months.
Okay, Shahina, what about you?
Yeah, I would agree. HCL Tech, I would say that maybe he should exit at a bounce, maybe close to 1,000, because I believe that the for a small cap, it's like getting decent valuations, and the overall sentiment for tech is not that positive as of now. So in tech, I would prefer the large caps like maybe an Infosys or TCS. As far as Grasim goes, I would give a hold. They are doing pretty well in some of their segments like VSF, and the valuations on the cement business, which of course they are holding a good stake in Ultratech, is doing pretty well. So I would continue holding in Grasim.
Okay. The next query has come to us from Twitter. Pune's Narinder Singh has written it. He wants to know whether to buy Canara Bank or Bank of Baroda for the long term. Shahina, which of these two would you pick, or both?
See, well, PSU banks have done very well in the last couple of months, and there seems to be a bit of consolidation, and I don't see too much downside in the medium term. But if I am a long-term investor, as the Twitter investor is asking the question, I would prefer investing in a large cap banking like ICICI Bank, private sector bank like HDFC Bank. Basically, HDFC is getting stronger. It will get stronger with the merger between HDFC and HDFC Bank. And as far as ICICI Bank goes, valuations are so attractive. It's just it's around 2.5 times. The capital adequacy is almost more than 19%. So I would prefer one of these two if I'm a long-term investor.
Okay, fair enough. Kush, what about you? Any of the two that you like, or would you like to go with another name altogether?
Sure. No, I like Bank of Baroda between the two. In fact, if you look at the whole PSU space, it's done rather well. And for the longest time, I mean, beyond SBI, there wasn't, a top pick that, came out. Canara Bank and Bank of Baroda both have done, rather well. And they do make themselves a buying candidate. Just speaking, technically, the structure for Bank of Baroda is a lot more solid. So, between the two, that would be my pick. A good entry point at for this stock would be at the current levels. Here the stop loss could be of 115, and the investor can hold this for a target of 135. So payoff ratio is also pretty favorable. Bank of Baroda among the two is the more preferred one.
Okay. Lakshman Yadav from Bihar has written in. He has 100 shares of ITC at 270, and he has 100 shares of HDFC Life Insurance, which he has bought at 650. So he wants to know what he should do, whether remain invested or sell, look elsewhere. What are his options right now? Kush?
Sure. I mean, ITC is practically a no-brainer with the kind of momentum that we've seen in the stock. Once it started the up move, it's barely seen the other way around. So 300 is a point where the stock is consolidating, but even that is with a very strong positive bias. We've not seen a breach of even the 20-day moving average. So ITC is a for sure hold. Assuming he's a long-term investor, the target here is 350. He should have a trailing stop loss of about 300, just so that if there is volatility, then he can at least book profits and maybe re-enter at lower levels. HDFC Life, I'm not so convinced about. The whole insurance space is a long-term story. Post-COVID, the returns have not been so great. Even the technical chart structure is not great. I would suggest a switch, from HDFC Life to a more active sector, something like auto or defense. That's perhaps a better investment.
Okay, Shahina, what would be your recommendation?
Yeah, I would agree with Kush. I believe ITC, there is a good up move even still, though the performance of the stock has been good. Still here, I think there is a possible up move. There are talks of demerger. Most of their core businesses are doing well. They came up with very good numbers in the first quarter, expected to continue over the rest of the year. So I would hold on to ITC. HDFC Life, I would also look to switch from here. Basically, while the long term for the overall sector looks good, I think they are going through some bit of pain because of the overall consolidation in the market, and they've seen a bit of slacking in demand in ULIPs, retail term insurance. So I think one can look to switch. There again, maybe better bet would be HDFC Bank over HDFC Life for the medium term. Long term, of course, there is no issue with the sector or the stock.
Okay, let's take a break on that note. We're going to be right back and we'll answer some more queries sent in by our viewers. Stay tuned. Hi, welcome back. You're watching Your Stocks. We have our two experts, Shahina Mukadam, who's an independent market analyst, and Kush Bohra, founder at kushbohra.com, are answering all our stock queries. So the next question that we have comes in from Diptangshu De, and he's on the line with us from Kolkata. Hi, Diptangshu. Good afternoon. What's your question for us?
Hello, ma'am. Hello, good afternoon. Yeah, actually, I am holding 3 shares. That is one Repo Home Finance at a rate of rupees 280 rupees, 140 shares. Bhansali Engineering at a rate of 154 for 140 quantity. And last one is Allied Digital. That is I am holding at the rupees 144. That is for 50 shares. So my question is that should I hold it for longer time? Like Repo is like few days back I was in losses, but almost Repo is covering these losses, and Bhansali also is moving up. So should I hold it for longer time, or once I cover up the losses, should I exit? So what?
Okay, fair enough. Kush, in the near term, what is the advice?
Sure. The near term and the long term advice is please use stop losses diligently, and you can always call in for getting your questions answered here. But that was on a lighter note. See, Repco Home has, as he rightly said, bounced back quite sharply, and this is perhaps a good time to exit. Even though this move is volume backed, the stock has resistance around 280 levels, at which he's bought. So after such a sharp run up and given the resistance zone, there is a possibility that the stock might cool off or correct a little. And here's his opportunity to exit at cost. I don't think he's got a very similar luck in either BEPL or Allied Digital. Both the stocks are trading lower. However, BEPL, Bhansali Engineering, has shown a breakout, but it faces resistance at around 135 zones, 140 zones. So he can hold on to those, he can hold on to Bhansali Engineering for 135, 140 zones. He may have to exit in a loss, but that will still be lesser than what he would be making a couple of days ago. Allied Engineering, Allied Digital rather, the structure's weak, the stock's not been able to hold on to its 20-day moving averages or any averages for that matter. That would be an exit, on an immediate basis, and he can switch to, other investments. As I said, something like a Lotus Labs is probably a good switch.
Okay, Shaina, what is your advice?
Well, Ripco Home, he's making money, and I would suggest that he can hold. I see a bit of upside from here. The main thing being that we've seen a good large investor, Omni's portfolio investments coming in, which saw the stock rally, the way it did in the last couple of weeks. I see things improving for the overall NBFC sector. So I would continue holding Repco Homes. Bhansali Engineering, I believe that, this is a small cap, low debt company. Valuations have corrected very substantially over the last couple of months. I think from these levels, it makes sense to hold because all the major pressure that we saw on raw material costs, which impacted their numbers, actually should be easing out in the coming months. Since the valuations are not expensive, I think, the investor can see some bit of return. Maybe 140. I don't see too much upside. I don't see him getting his price by price, but maybe a slight upside from here. As far as Allied Digital, the stock had given a big rally after the company announced a big contract that they had with a global auto giant of 650 crores. But after that, after one good quarter last year, the numbers have not really kept in line with the stock performance. So the stock has again started showing a consolidation. But I think still, if he continues to hold, because we are seeing a bit of consolidation, maybe he can see a price of 145. But definitely, I totally agree that stop losses need to be kept, strict stop losses, because these are all small caps. And, if you see a correction, then a sharp correction, then you could lose a lot of money.
Okay, next up, Aruna Deshpande has written in from Aurangabad. She says she has 100 shares of PNB Housing Finance at 325 and 25 shares of Steel Strips at 740. Now wants to know what she should do at the moment, whether she should book some profit right now or carry on. Shahina?
Well, I think she can continue holding both of them. PNB Housing has started showing, it is showing a bit of consolidation and rally from here is likely. They are raising funds 2,500 crores, which should result in a good, growth in the book. So I would continue holding, and also valuations are not expensive. Price to book is just about 0.7 times. Steel, steel strip wheels. Also, I think she can continue holding. I don't track the stock very closely, but I think the momentum is there in the stock, and medium to long term, she should make decent amount of money over here.
Okay, Kush, what is your recommendation?
Sure. First up, she is in profit on both these stocks, so which is fabulous, and she's holding on to them. What she should do right now is hold both of them with a trailing stop loss. So we are quite bullish on the entire housing space, be it the financing or the developers. The entire housing space looks well, and PNB Housing is now coming out of a slump. The stock's trading fairly above its averages fairly comfortably. The indicator setup here is positive. I believe on an immediate basis the stock could go to 380, 385 levels. Her stop loss, or trailing stop loss rather, could be at 355. So hold on to PNB Housing with a trailing stop loss at 355 for a target of 385. Steel strips also, the stock is in a consolidation zone, but it's with an upward bias. The volume action is decent, nothing to write home about, but it's decent. The stock's holding on to the averages. Here also, I would suggest hold on with a trailing stop loss of about 815, where the 50-day moving average is. The stock could move up to about 900 levels. So hold with the trailing stop loss on both of them.
Okay, fair enough. Karuna Sharma from Nagpur says she has 60 shares of Jubilant Pharma bought at 470 and 55 shares of Gujarat Ambuja at 360. Now she's making losses and wants to know, are the future prospects enough for her to remain invested, or should she look elsewhere? Kush, first to you. Is there an upside? What is your target?
Sadly, there isn't, Sumera. That doesn't appear to be. We've seen a bounce in Jubilant Pharma, but hasn't sustained. The stock actually made lows of about 320 a while back, and it's again headed towards those levels. Any meaningful jump was sold into. So I would suggest, if she wants to hold on to this stock, please hold it. Hold with a stop loss of 320. If the stock comes to those levels, please exit, because otherwise the fall could be sharper. For Gujarat Ambuja Exports, here the stock had run up very sharply, and after that it's gone into a consolidation phase, although even that is with a positive buy. So I would suggest this is one stock that she can hold on to. However, I still advise a stop loss of 280. I do see her buying price coming, but it could take about good 6 to 9 months. So Gujarat Ambuja, hold with a trailing stop loss, and Jubilant Pharma, either sell immediately or hold with a stop loss of 320.
Okay, Shahina, what about you?
See, Jubilant Pharma, after the correction from 1,000 type of levels that we saw in 2021, it's been a one-way slide, and this is actually reflecting on the deterioration in the numbers. And there doesn't seem to be any stop in the deterioration. Even first quarter, we saw further deterioration. So I would switch. It's a small cap pharma. I would not remain invested in the company. Better to be in some of the larger names that I have already mentioned in pharma, if she wants to be in the sector.
Okay. The final query today comes in from Kalpesh Yadav from Patna. He has 25 shares of GE Shipping at 440 and 70 shares of Minda Industries at 450. He's making profits and he wants to know if he should remain invested or book his profits right now. What should be his call? Shahina?
Yeah, I would suggest continue holding both of them. GE Shipping had a very high debt, continues to have high debt, but if you see in the last 2 years, they are making good profits and they are reducing the debt. I think the overall sector has also started to look better, which is reflected in their numbers, which we see in the last quarter. So I would hold GE Shipping. Minda, small cap, strong balance sheet, valuation not very expensive. They are seeing pressure on their EBITDA and their profits, as we saw in the last quarter, because of higher raw material costs. But I think this thing should ease out. Very strong product portfolio. So I would continue holding both.
Okay, Kush?
First up, both are very fabulous buys, and what is encouraging is that he's holding on to them, riding his profits. So kudos for that. GE Shipping, again, very strong chart structure. Just yesterday we saw a breakout in the stock, and the stock is giving a very strong follow-up today as well. So please hold on to this. Keep a trailing stop loss of 550. If the stock falls to around those levels, you might want to book your profits and then maybe re-enter at lower levels. But at the moment, keep a trailing stop loss at 580. The stock could head to 600 zones in the coming days. Minda, however, not as aggressive as GE Shipping is, but even there the momentum is positive. There, the stop loss would be of about 535 and the stock could run up to 575 levels. So hold this one also with a trailing stop loss.
Okay, Shahina, Kush, thank you very much to both of you for joining in and for advising our viewers. We're going to wind up on MF Corner for today. Thanks very much for watching. Do stay tuned. The team of Closing Bell joins in to take you through the last hour of trade.